Joe, Shaun, middle of October. Welcome to the deal of the week. Happy Sukkot, happy everything. How are you guys doing today? Feeling good?
Deal of the week.
Energized.
Always.
Yeah.
Always something new and exciting to report in the world of New York City real estate, Seth Glasser.
I love it, man. So Shaun,
You're looking good today, Seth.
I feel actually even better than I look, believe it or not.
Very Hollywood at the black sweater.
I was going for like a little Steve Jobs, Ashton Kutcher look.
Yeah. Working on it. All right, let's talk about the deals. No one wants to hear what you wear today.
That's true. All right, Shaun.
All right, so
28th Street. This is a nice looking building.
Yeah, so I've been preaching from the choir a long time that I think buying properties that have durable cash flow, that have artificially low rents by nature of rent stabilization, that are currently out of fashion, not in vogue, not the fashion statement of the week, and that are severely and significantly below replacement costs are a tried and true way to make a lot of money in New York City. It's very difficult to see everything, but when I look at these properties that are in Astoria, 77 unit elevator building, been owned by the same family for 40 years, kept extremely clean. You do not need to be an extreme pro to own these assets. They have taken immaculate condition and care of them. These are the types of properties that used to sell for 20 times gross rent roll and are now available in the 10 times, gross rent roll range at a real cap rate. And there's some hidden value here, but the main point in this asset class is it's significantly below replacement costs. There's an old adage, buy below replacement costs. When it hits replacement costs, sell it. And I still think that statement is going to look really good over a 10-year time period in New York City. We just sold, this is an elevator building, again, well maintained. We're asking 300 a foot or around that level. Just down the block, we just sold buildable land for $254 per buildable. So you're comparing a piece of land that has the ability of air to pay $250 per the ability to build something on it, or an existing structure that's well maintained for $300 a square foot. So this is where I am talking about this significantly below replacement costs. How do you create value out of this? At some point, they're going to amend the rent revenue prison that the laws are currently situated in, and or they'll come up with some type of tax abatement and you'll get some NOI improvements there. But there's something about buying assets and bricks so far below or basically at par with what the cost of buildable land goes for. So this is right near, the Mount Sinai Hospital, fantastic location, no arrears, no violations, right next to the NW train. Asking 16.95 million, generational type asset. You make a lot of money here by growing the preferential rents to market. There's a little bit of a gap, not because the rents aren't achievable. It's just because the ownership profile of having owned it for 40 years, they just value stability. And so with a little bit of a wiggle room on the price and a little bit of wiggle room on getting the legal rents up, you're basically able to build into a 6 cap. And I guarantee you that when there's a mechanism for upside in these buildings, again, you will not be selling these at a 6 cap, even if rates are in the 5.5% range.
Yeah,
so yes,
it'll a nice looking building.
Yes, it'll come, it will require a lot of cash up front. I will tell you that in this environment, the smart and savvy buyers that are still looking for reasons to pick up high cap rates are maneuvering for, more cash in, but 2 years interest only at the higher rates in order to get by this next, time period, with the expectation that there's going to have to be quantitative easing. And in 2024-25, you're starting out at a higher cap rate than ever before in an elevated rent stabilized building in Astoria, that you're going to, be looking like the smart guy. And I think this is just an excellent opportunity if you don't want a headbanger and you want to, have a little bit of hedge in the rent stabilized world, but pick up a quality asset in a quality location.
If you're in the market to buy a rent stabilized apartment building, this looks like it checks every box, right? Good location, super clean, doesn't require any CapEx. You have some pref rents in here. It looks like the units are on the smaller side, so you probably are more likely to get a little bit of turnover.
Smaller side, but look at the price per square foot metric. You're looking at probably an average rent per foot of under $30 a square foot. New construction is $60 a square foot. This is an area where the only new product that can get built is new construction. So again, it's hard to see the full 10-year picture on this with where rent guideline boards acts right now, but I just believe that these are the times when you want to be a contrarian.
Yeah, interesting. All right, Joe, you want to tell us about something
So
pretty
speaking
different?
of location, this is the corner of Grand and Mulberry. This is the heart of Little Italy. You have the world's oldest cheese shop on the corner that it's been getting a lot of press lately because they haven't been paying rent. So there's a huge opportunity to repurpose this piece of property. There are air rights. There's additional. You have 150 feet of frontage, or wraparound frontage. You have 50 feet of frontage on Grand Street, and you have the opportunity to repurpose the retail on the corner. You're all free market. The corner building has a unique commercial tenant in there where they're doing short-term offices, and it's working out well. They have an amazing roof deck that they're throwing events on. It's a really unique piece of property. I think the real story here is the ownership. It's been the family for 60 plus years. And there's a real opportunity for somebody to come in, buy a free market building, reposition the retail, and take advantage of the location.
So the corner retail, correct me if I'm wrong, has been in business since early on in the pandemic, and it's just not been paying rent. Why?
Why? Because they just, some tenants took advantage, and unfortunately, this tenant has been one of them, and they're currently in litigation, and this is coming to a conclusion shortly.
And so everybody wants a deal in today's market. They need to think that they're buying a deal. What makes this a deal relative to what it would sell for if all the issues that are currently there with the retail tenant not paying, the overall economic financing climate, does this sell for $2,000 a foot? If it's fully done and, maximized, and $1,145 a foot looks like a Brooklyn price. So
that is correct. I mean, I think at the end of the day, this property presents itself as a blank canvas for somebody to come in and reposition it. And yes, we've sold several buildings, like we just closed one in the East Village for $2,000 a foot. So there are exit prices of that. I think the retail that they were currently paying is under market. So there's a room to grow that rent. And I think you'll see that as that submarket matures and it's already been turning over.
So what's
Go ahead, Shaun.
Yeah,
I was just to say, flip back. So the pro forma is not making a gigantic leap on income anywhere. It's basically just assuming Aliva starts to pay, or the next tenant that takes their space starts to pay. What's the pro forma cap rate? Is it 5.5?
5.5 cap. Pro forma.
Yeah. So for a corner in Soho, with
tenants pay all their own fuel, so it's very low maintenance. Corner. It's Little Italy.
What's the story with this apartment? Your apartment number 1 is paying $700 a month.
Yeah, that's a old tenant that's been there a long time. Like I said, the owners owned it for 60 years. So they just
But it's legitimately a free market.
It's a free market unit. It's a free market unit, and that's what we know. And it's under 6 units, that building specifically, and it has never been registered with the HER. Got it.
My final question is, how did someone who's lactose intolerant get hired to sell a building with a cheese shop?
I had a feeling you were going to go there. I think that was a requisite because they knew how much I hated cheese, so they wanted that tenant out.
I mean, awesome. the key here also is just these air rights. Yes, it's landmark, but there's how many? 15,000 square feet of air rights. So
yes.
You only have one low paying tenant. I mean, maybe there's some maneuver to vacating the entire property at the right time and adding some floors. I mean, that's where the big pop's going to come.
And I think the key play also on the retail is splitting up the smaller spaces along Mulberry Street, and you command a higher price per square foot for those smaller retail spaces.
Yeah, that makes sense.
Are we in the Bronx, or are we in Marble Hill? Where are we?
I don't know. I guess it depends who you ask. Yeah, we are up in Marble Hill here. Is it the Bronx? Is it Manhattan? I don't know. Everyone gives you a different answer, but
no, physically, you can tell by the taxes. The taxes higher.
Yeah. Physically, it's in the Bronx. Politically and technically, it's in Manhattan. This building overlooks the water up in Marble Hill. We are selling this for a very long-term owner. They've owned the property for about 50 years. This is 93 apartments overlooking the canal and the water here. $155 a square foot, $146,000 a unit. About a third of these units are actually deregulated. The paperwork is almost perfect. The average free market rent in this building is $14.50 a month. So, and the other 2/3 of the building is almost all on preferential rent. So here you can see in the notes here, all preference. So you've got about almost $400,000 a year in a spread between the actual and the preference, not even including bumping up your free market apartments to legal. So if you look here as an example, a 1-bedroom free market apartment charging $1,400. If the only thing you did was renew the free market apartments with Section 8 tenants, you would build this to over a 7 cap.
Ooh,
And
now
then
you
you would have
tickled.
the other 2/3 of the building with preferential rents. So this is a really easy value add play. It's legitimately value add. The average rent of the building is not even $1,400. You see over here, the taxes are already 22% of the gross income. So you don't have any huge tax increase exposure. I have all the actual expenses. So you have a really true NOI here of 673, and you could, without question, within 12 or 18 months, build that up about $100,000. The average free market rent here, 28% of the units, there's 26 apartments, $1,482 a month. $1,482 a month
so-
for a free market apartment.
And you're growing the income 100,000, but that legal rent column with all the preferentials raised goes up 400,000. So there is an even bigger pop from there, is what you're saying. Like this
Yes.
building looks like it's priced as if it has no upside, but it has a ton of upside everywhere you look if you dig.
Yeah, you just have to dig, 1 or 2 layers deep, but we're asking a 5 cap, 9 times the rent. This is a really competitive, priced well type of building. The family that owns it has owned it, like I said, for about 40 years, and they've taken phenomenal care of it. This is 1 block from the Metro North station at Marble Hill, and it's 2 blocks from the subway station at Broadway at like 228th Street. So here you can see all the types of renovations that they've done. They've taken excellent care of the property. There's like a real pride of ownership here. The building, actually, it's kind of interesting. You walk in, there's 1 entrance, and then there's a common courtyard, and then it separates into 3 separate entrances. So what I like about this building in the era of post HSTPA is that there's not a lot of common area expense upkeep. So you can see here, like the lobby is very basic. There's nothing grand or overly impressive about it, which is good and bad, but you don't have to go spend your entire CapEx budget on the entranceway of the property. There's no elevator, so you don't have to worry about new local law elevator. There's no local law 11. It's only a 5-story building, so you don't have any pointing issues. Here you can see where the property is located. So this is a really nice value add opportunity for someone. Call me if you have any interest in this.
Is there a lot of competition on that deal?
There's a lot of competition on this. There's a lot of competition. This is a good deal.
How's the paperwork?
Excellent. Excellent. This is the only building that they own. This is squeaky clean, 30 violations on 93 apartments, excellent paperwork, true value add, free market preference, no CapEx needed. This is a nice deal that someone's going to do very, very well on.
Great.
All right, gentlemen.
That's fantastic. If anyone wants to take side bets on which of the 3 deals of the week will sell first, we are open for action. You could actually collude and make your results true.
We should
That's
post
actually-
we should post that.
By buying one.
That's a great idea. Get on FanDuel. Yeah.
All right, guys.
All right, guys. See you
Let's hit it.
soon.
Take care.